Do you think people are waiting to save that 20% down to buy their house?
I know they are. That's a mistake.
That's a
We'll tell
big
you why.
mistake. Yes. So, one of the things that drives me nuts is when I talk to people and they're like, I cannot buy a home right now. And I'm like, why not? I mean, you have a good job, your husband has a good job, your family is in a good position. You guys can do this, I know. And they're like, no, we don't have money. I'm like, what do you mean no, you don't have money? I see you do have money. And they're like, no, we don't have money saved.
Yeah, which is a
So,
good thing to do. I hope everyone has money saved.
yes.
But you can get a home for 0 down or 3% down or 3.5 or 5 or
Yeah,
10.
there's so many possibilities, and I think that it happened to us what we kind of fear the long commitment because it's like the 30 years. You don't know how life is going to be, how the world is going to be at that moment. And so we kind of back up and say, oh no, we don't have enough money to give a down payment. So that's why we're not buying a home,
Yeah.
But you're missing out of so many other benefits by not buying a home. You're
Yeah.
missing out.
So mortgage insurance, which was originally created in the 1880s, made popular more by FHA in 1934 in the Great Depression, which became private industry in 1957 and really popular in the 70s, allows people to buy a home with minimal risk. And the last home
Yes.
I bought with 5% down, even though I could have done 20% down because of leveraging funds, which you can
Yes.
do on a mortgage.
Yeah, there just yesterday I was talking to somebody and saying, "Hey, they're like, well, what would be a good moment to buy a home?" And I said, "It's always a good buy to buy a home. Might not be always a good buy to sell it, but if you have a home already, if you that money is working for you, it's increasing its equity every year for about 3%. So it's money that you have in the bank basically that is your own home, and you're getting. Obviously, it's hard to say, well, I'm just not going to put anything. I'm going to get a higher payment. Maybe that is the reason why you need to save, but don't make it so I need to save or else I would not have a home.
Right? And typically, if you look at the model of how much you can save a year versus how much a home appreciates, you're losing money saving
Yes.
more money for a down payment than
Yes.
you would if you bought the home and let it appreciate.
Now, now that you're talking about that PMI, that has been the reason why we can buy a home without having a 20% down. That's exactly what it is. It's an insurance that the banks charge you for allowing them to loan you more money,
Right.
basically.
In case you default, the mortgage insurance will pay the loss to the bank.
Yeah.
So it allows you to go in
Yeah.
with an amount not sufficient to the risk that the bank is
Yeah, the
taking
banks are
because you get
taking.
insurance.
Yeah. And so, I mean, it's an extra cost, but having a or still renting, it's a higher cost
A much higher cost.
than that.
Yeah.
And I mean, if you see it right now, it's like, well, I don't know, I rent a two-bedroom house, one bath, and it's about 1,400. There's not a home payment that's going to be 1,400, and you're right, but you're going to be paying that 1,400 forever, and you're never going to get anything out of it. And there's a lot of other benefits to buying a home, not just the home, but tax related. There's like tons of other things that you can
Security
do,
related. But the other
security
thing is
related.
opportunity costs. The
Mm-hmm.
longer you wait to buy a house, the more
Yeah,
expensive houses get, and the
yeah,
more and more out of
yeah,
reach it gets.
yeah. And a lot of people say, well, no, we better wait until the interest rates come down. I'm thinking, well, they're pretty down. Like in my country, in Mexico, interest rates are not at 5. They're on the 10s and 12s. So if you're here and you have the ability to buy a house. The interest rate, the money you pay for that house is going to be less than if you bought it in your country. So, and the equity of the ability to get money out of that house is way higher than you buy it in the country. So, yeah, just like it's a perspective thing,
Yep.
I think, right? So there are other people that want to wait to have that 20% because that's how they feel sure and secure, but it's not always wise. So if you have more questions about this, give us a call. Well,
Or if you want a breakdown of how your money will be best used over the years by
yeah,
paying mortgage insurance or saving for down payment, let us know.
yeah. Let us know. Just comment below. Give us some questions so we can help you out and be here when you buy your house. Okay. See you in the next video.